Kia ora and welcome to Context with me, Corin Dan.
And me, Guy and Espiner.
Now, context, of course, is the back page story to the front page story.
That's right. So we take an issue that's making lots of headlines that people are talking about today, and we go back through the archives, back through the history to figure out how it was we got to where we are today.
And there's a cunning little catch here, isn't there? Because only one of us knows the topic.
That's right, and I don't know it. So to put me out of my misery, what are you going to drop on me today?
Well, I'm dropping housing on you.
Ooh, okay.
Housing. Because you inspired me with your tax podcast.
Yeah, you listened to that in great numbers, so thank you.
Yeah. People love the tax.
People love a bit of tax.
It got me fired up. Tax,
Yeah,
you know.
we love it.
And there was so much, and they raised a lot of questions about housing. And housing is just so fundamental to this country. In terms of the politics, psychology.
Well, what do they say? It might be Bernard Hickey's line, but there's some line about saying that New Zealand is, a housing market with an economy tacked on the side of
Something like that. It certainly has felt like that at times over my reporting career, where for so much of it has been dominated by the housing affordability debate. The property market going crazy. So I want to start, though, because we're in a weird environment, and this is where we got to with that tax discussion in capital gains a few weeks back. We're in this sort of weird state, which is not that familiar, although we have been here before, not that often for many generations, of a massive housing slump.
Yeah, it's phenomenal. I mean, just today as we are recording this, I saw numbers come out saying that 20% of houses sold in Auckland this year were sold at a loss.
Wow.
And that just didn't happen. I mean, you saw house prices...
It was almost impossible, 10 years ago for people.
Yeah, and you talk about 10 years, they would traditionally double over 10-year periods, and then you'd see it plateau for a little bit in Auckland, and then off it would race again. So to see how soggy it is at the moment is phenomenal.
Well, let's have a little listen, because it has been dominating. I mean, it's just survey after survey. Let's have a wee listen.
The housing market is continuing to cool.
Auckland has had the biggest fall.
The housing market remains sluggish.
Property sales were down 8.3%.
Yeah, whichever way you cut it, the housing market's pretty flat at the moment.
It's first home buyer bonanza at the moment, really.
It's so interesting hearing. I don't want to be cruel to the sector and say putting a spin on it, but for so long there's a temptation to sort of go, it's coming right, or first home buyers, it's great, but really, do you have any sense of just how much the housing market has fallen since the peak that we got in COVID?
Well, I suppose it would differ in terms of the regions, but across the country, you might be looking at a 20% drop from peak COVID.
Yeah. It varies depending on the place. But if we think about COVID, and just for people's background there, so let's just, before we get right back and look at some of the booms and busts of the past, if we think about COVID, at that time, the central bank and governments around the world, including in New Zealand, was so paranoid that the whole thing was going to collapse, that the whole economy is going to collapse. So they pumped the accelerator through all sorts of mechanisms and monetary policy mechanisms, and they make a lot of money flood into the economy to keep it up, because everyone's working from home, and then you've got the lockdowns and people can't work. There was a real fear, wasn't there, that we were going to have a depression.
There was. And I remember specifically and personally walking out onto Shackleton Road in Mount Eden, where I was living at the time, and looking up and down the street and thinking, these houses aren't going to be worth anything, because people aren't going to be working, and what's going to happen? I thought that my gut reaction was that the house prices were going to massively fall, and instead the opposite happened, and the market just roared away for a couple of years.
And that was because interest rates basically went to zero, very low interest rates, and all this, and the banks got given a whole ton of money. The Reserve Bank basically was effectively printing money, but creating credit so that the banks would lend, because it's a blunt tool, but it's the mechanism they need to just get demand back into the economy. And so one of the channels was through housing. And of course, the argument was they should have pulled up a bit earlier than they did, and they were criticised a lot for that by a lot of economists and stuff. But the upshot was that the house price surge from COVID was 43% in 18 months.
Wow.
And you had annual growth peaking above 30 to 40% in Auckland and Queenstown. So that means a house in Auckland that was about $885 before the boom, at the end of the boom by late 2021, had gone to $1.25 million.
Yeah.
I mean, I can remember, I don't know about you personally, but, everyone's sort of always looking at real estate, next door neighbour, and, what's your house worth?
Yeah. You'd feel richer, wouldn't you? You wake up in the
I
morning.
could distinctly remember just seeing, it was almost like those sort of valuations would add, like, the next door neighbour's house just went up by $500,000. And you're like, that is not worth another $500,000.
No, it was insane.
In the time that it has gone on. And of course, it wasn't, because it was this manufactured boom in some ways, because it was like they had to do it because they had to make sure that the economy didn't crash. But the consequence was a very unhealthy housing boom because the money went into housing. And then, of course, came the bust. And so pretty much house prices have fallen away significantly, lost most of that. So you've got 15 to 18% from the COVID peak, but once you take inflation into account, you're looking at something closer to 26, 28%.
Oh, yes, so I was roughly
fall.
not too
You
bad.
were
Will you
pretty
give me
good.
that? Will you give me that?
I'll give you that because, and one of the things that gets a little confusing when you're talking about house prices is, that what they actually fell, like the price fall, but if you think about the fact that maybe you've got 5% inflation and 6% inflation each year, actually, it might be that you have to add that on and it's fallen a lot further in real terms. So, and that happened in the 70s, for example. There were quite big, very high inflation.
Yes.
House prices were rising nominally and they were going up 6% a year, but inflation might have been 18% a year. So actually your house price is going down in value. So anyway, I don't want to get too technical with that. So we saw a big slump, and it's been devastating for people. If you think about, you must know the people who bought at that time.
Yeah, if you bought in 2021,
Devastating.
and then you were forced to sell for separation, you're moving cities, whatever it was, then you get a hiding.
Cruel and unfair that just the timing. It wasn't through no fault of your own. You're thinking, I've got to get into the housing market.
Yeah, and also because, and I'm sure you'll get to this, because it plays such a central role in people's, economic well-being. It's usually their only investment often, and it's their security for the future. And so we really hold tight to that, eh?
But why is that? And that's a really interesting, good segue for me. If I was to say the half-gallon, quarter-acre Pavlova paradise, would that ring any bells?
Oh, absolutely, yeah, that's right. That was it Mulgan?
Mitchell.
Okay.
I think Austin Mitchell.
Austin Mitchell, was it?
Yes,
Yeah. That was, and that was the dream, wasn't it?
Exactly.
That was the Kiwi dream.
And I sort of look back to see, where did this so the quarter-acre paradise, referring to literally a quarter-acre section that has, been maybe divided up in a town grid. There were a few references going back to the 1840s, 1850s about gardens and things, but I think it really didn't come into sort of the psyche, and this is what I want to get at with housing here, of the Kiwi dream, let's call it the so-called Kiwi dream, of getting your quarter-acre paradise. So that's, in other words, you got the standalone house on a section with enough room to grow your own veggies, have a backyard you got to mow, kids going to run around the clothesline or whatever, and that becomes this sort of weird ideal housing dream for New Zealand. And I think that's important to think about when we think about housing, because I think it's even in Gen X as well. You could argue it's been slipping, and we'll get to that. We'll get to that.
Yeah, I think that's right, and also, and the word paradise was used in the quote that you had, and I accept that vision because, these people would also have been looking to what they used to call the mother country, and, you'd look at London and all the semi-detached housing and everyone living cheek by jowl, and the idea that you had your own bit, and it wasn't attached to anyone else's, and you had, and it was your
That's
castle.
exactly right. And I think we should acknowledge that we are looking at this, if you think of a colonial context, because of course Māori are already here, and a lot of the land that would have got subdivided into quarter-acre paradises was actually theirs. So I want to acknowledge that because that's, and say that that's sort of our starting point, but that does need to be acknowledged. A lot of the early housing in the early colonial period, You're talking a lot of workers' dwellings, railway cottages. So a lot of the housing was starting to be provided in that way as New Zealand started to become a settler community. Then there was some key points in this sort of journey till we get to the 50s, 1920s, state advance loans. And this is a theme I want to really come to. Any idea what's going on there? I mean, effectively, the state started lending people for houses.
Yes, and that continued, didn't it, for some time, where they would actually guarantee lower interest rates or advance loans at special rates for people to actually so that they could pay these off on favourable terms.
Quite extraordinary, and I'll get to some of them. So that starts at about 1920. In the 20s, and I think at some point that could cover up to 95% of a loan, and that was doing nearly half of all homes by the end of the 20s. But there were major problems still around housing and providing housing for all, and it was this guy, if you can tell me who it is and what might be happening, who sort of changed the game a little bit.
Everybody is happy. The Prime Minister, Mr. Nash, Mr. Semple and Mr. Lee take their coats off and help to carry in the furniture. Truly a red letter day for home seekers. In addition, the State Advances Corporation has made available to those who wish to build their own homes the sum of £2.25 million during the last 2 years.
That is actually a reporter speaking about somebody.
Yes, I imagine he's speaking about Michael Joseph Savage.
Correct.
And I would imagine that was Miramar.
Yes,
in about 1934.
I was going to ask you that. I'm impressed. Miramar.
1934. Yeah, Miramar. That was the first state house.
37.
Yeah.
I'm
37. Oh, jeez.
Pretty close.
Shocking.
Pretty close. And by 1939, apparently they were building 57 a week, and there were 10,000 applicants waiting. So that those state homes and that state building program, which Labor politicians to this day love to talk about. Yeah. Although they couldn't quite emulate with Kiwi Build despite their best efforts.
I think it aimed for 100,000 and I think got 2,500 or something like that.
That was
which is kind of like saying you're going to the moon and getting to the corner dairy.
That was that in itself was a whole interesting thing, and that they put so much store in trying to do that and they couldn't deliver it.
No.
And that hurt them badly politically, arguably, didn't it? So we've got the state house building program, we've got state advance loans from the government, and then we get into this. If we're going to have a quarter-acre paradise period where this, again, inverted commas, Kiwi dream, ideal dream, bearing in mind that it wouldn't have been for everybody, but for a big chunk of middle New Zealand, we're talking the 50s and 60s. Let's have a little listen to this clip.
And here in the suburb of Mariwa, the government is helping the expansion of housing with a group building scheme. Designed to produce more good standard houses at lower cost, the scheme is proving a success all over the country. A builder operating within the scheme undertakes to erect a group of houses. He markets them in the usual way, but in the rare event of his not selling them all himself, the government will buy a proportion of the total at a previously arranged price. With this guarantee, the small builder can now raise capital to build groups of houses.
So I suppose that was the first Kiwi build or something.
Yeah.
That was 20,000 homes apparently they did in 1954. And then again, 34% of new mortgages in 1954 were coming from the government providing them. The government providing the loans. Any guesses as to what you could get? Okay, we'll do a little pop quiz here, just a quick. What do you think a reasonable interest rate would be on a 1954 government state loan?
In the 50s, would they give it to you at about 3%?
Yeah, between 3 and 5. Well done.
Gee, that's pretty good.
And here's the kicker, though. Any guess on what the term might be?
50 years?
40 years. You don't get 40-year loans now, do you?
No, you don't.
You get them in America. And that's another whole thing. You have to ask my brother about that.
And they locked the whole interest rate in forever.
Yeah, but no, they had 40-year terms. So this is really interesting. So if you think about it in the 50s, and remembering New Zealand was arguably the richest country in the world, or one of the richest countries in the world. It was number 2 in the 50s with the Korean War. So this is the golden period.
That's right.
So they are providing state homes that they're building. The government's lending up to 34% of new mortgages itself. the home ownership rate at this point has gone from 61 in 1951 to nearly 70% by 1966. So there's a big post-war shift into home ownership. It's really starting to take off. But I just think it's really interesting because it's not just the fact that you could get A, a cheap loan, B, for 40 years. They had this thing called the family benefit capitalisation, which was like working for families, right? So you're effectively getting money for children. You could take it as a lump sum as opposed to weekly, and then you could put that towards your deposit.
Yeah.
And that put lots of people into homes and was really, really instrumental. So that period, people were getting a lot of help. If you think about it, the government was really active in the housing market.
They were, and you might have heard this, an audience might have heard this term of being a property-owning democracy. And the idea was that you had a stake in your community.
100%.
And if you did own a house on the street, then you cared more about maintaining it and maintaining the street, and you had a stake in your community. And I think that's what worries a lot of people, that as home ownership rates drop, not only is it harder because you have the potential of getting kicked out of your home and you have that insecurity, but the idea being that you have less of a stake in your community. And so, some countries like Singapore, who are still really free market economies, still do have big state intervention in the housing market. And it's something that we've turned our back on.
We have a little bit, it's fair to say, and we will get to some of the changes. Another interesting point, which is always interesting to think about, is one income affordability. Basically you could do it on one income, and let's face it, there was a pretty sexist workplace back in the 50s and 60s.
Yeah.
I mean, women didn't have a lot of options, and there was a lot of women who weren't working, but they were. It was one income could service those loans, whereas now, if you're living in Auckland, that's pretty bloody difficult, frankly.
Yeah, and you'll probably get to some of this, but the ratio of what you earn versus what the house is worth has changed dramatically. I mean, I think it peaked at about 9 in Auckland.
Any guesses what it was in 1950s?
I'd say 3.
Correct. Bang on. Bang on.
Yeah, and I say that not because I knew it, but because that's basically that's basically that's the basis of affordability.
Yes.
When you read all the studies about it, they say 3 or 4 times the size of your income.
Yeah.
So, if you were earning 100K, that means a affordable house, 300 or 400K.
Yeah.
And in Auckland, it's probably, I don't know where it quite sits now, but last time I was doing stories about this as a journalist, it peaked at about 9.
Yes, you're absolutely right. It peaked at 9. It's come back a little bit.
Is it? Yeah.
There is, so affordability is actually getting better.
Yes, it's increased, yeah. Yeah.
The people who own the houses already might not like it because their house price is going down, but the first home buyers absolutely are in a better environment, but it's still too high, you would argue, at 6 or 7.
Yeah.
It's interesting as we move through to the 70s. So we've talked about this before in context about the oil shocks and the difficulties with the economy. So the government starts finding it more difficult, of course, with its intervention in housing. Quick note, as I think I might have mentioned earlier, you got a big fall in house prices between 74 and 80 because they weren't keeping up. They were rising, but inflation was a lot higher, so you were going backwards, really. So the big issue in the 70s, though, was it was hard to get loans. So it became a barrier. Getting credit was rationed. So Muldoon's controlling the economy, the money in, the money out. He's got his hands over everything. So it's much more difficult to actually get a loan. You hear stories of people getting bridging loans and building societies.
And they used to go to lawyers, some sort of trust fund, a
they
lawyer's
did.
trust fund.
Yes.
Yeah, I mean, my father, who passed away a few months ago now, he bought the house I grew up in Cashmere Hill for $16,000.
Yeah, wow.
But I think they needed like 3 sources.
That was very common
to actually get the loan, and I don't quite know how it worked, but you used to go to some lawyer's trust fund or something to get the top up loan. It was extraordinary.
It was as though there was a queue, basically. It was just hard to get. So that was the key barrier. So then, as you can imagine, there's a pushback against that as we move into the 80s, as we've talked about before, and the reforms and the deregulation of New Zealand. So in between 84 and 87, they start ripping off all the financial restrictions on money, I guess finance.
Yes.
All the changes around monetary policy, all these sort of issues that were so tightly controlled in state intervention, they come off and it moves back towards the market. So the state begins to fade as such a big lender.
Yes, and we sold the mortgage corporation, didn't we?
We would have, yep.
Yeah, that was an SOE, and we sold that.
So we know inflation was roaring in the 70s. Can you give me an idea of what floating mortgage rates? Now that's the one that is mostly affected by the Reserve Bank now. It's the short end of the curve. At the moment it'd be about 6.5% or something like that. It goes up and down straight away. You're not fixed on anything. Any idea what it peaked at I think it was in the 80s?
Yeah, I would imagine 21%.
Oh, very close, 20.5.
Yeah.
25.5. And you hear this a lot.
You'll
don't
give
you?
me that one?
Yep, I'm going to give you that. You do hear this quite a lot. Do you get this? People say, you get this generational debate about housing.
Yeah, it was tougher in my day. The sort of
people
shoebox in the snow
20,
sort of thing.
20% interest. You guys have got it easy. What are you talking about? Yeah. The gravel in the road, all the rest of it. Yeah. But the issue there is that, again, and without going to get too technical with economics, is, you were dealing with inflation that was very high. People's wages and price setting was also very high. So whilst the interest rates were high, you might have been getting very high wage increases as well.
Well,
to
that's
meet the
right.
rate of inflation.
And the challenge for those guys, obviously, was once you had your house, and it was pretty hard paying it off because you had high interest rates, but they weren't locked out of the housing market in the way that people have been when the house is worth 9 times what they're earning, because you simply can't get in. You can't get the deposit together to actually get in. Yeah.
All right, let's have a little listen to some audio and see if you can give me the significance, or you can tell me what it is, and perhaps the significance to the housing market.
Auckland followed the other major world markets this morning. Investors bailed out, putting the chalkies in high gear and the market in free fall. Panic selling in the wake of the Wall Street crash wiped more than $4 billion off the market value in less than an hour. For the first time, the overnight quotes were totally cleared before trading. The Stock Market Association considered a suspension as pandemonium swept through the market.
I was talking to Bob Jones at lunchtime. He reckons his asset backing's over $2.
Yeah, so that's the 87 crash. Was it October 87?
Yep.
Yeah, and this is relevant in my view to the housing market because a whole generation, many lost their retirement savings. Yep. We'd piled into the share market in ridiculous numbers because we'd gone from a country where it was pretty much Fortress New Zealand and you couldn't really get into the market, and so we'd piled in massive exposure to Briley's and these other companies, which we didn't have a proper securities exchange and good regulation. So we'd piled in overexposure. People got massively burned, and they sort of went to this retreat to safety and piled into housing because it was safe, and they were frightened of the share market. And in my
bricks and mortar.
Yeah,
and
you could see it. And
no, it's exactly right. It's a really interesting juncture.
Yeah, isn't it?
Because before 87, housing was still primarily a residence, somewhere to live. It wasn't seen, there would have been some, but it wasn't seen as an investment opportunity as much.
Yeah, and it's still one of the strange paradoxes about New Zealand, isn't it? And it's always bugged me that we've kind of created this sort of, first for sort of mums and dads, but then you get this sort of broader investment sort of category, and we've made housing, we've changed it from somewhere to live to this way to make money. I've got nothing against people making money, great, go for your life. But when it comes and crowds out the ability of people to live in a warm, dry home, that seems to be where we've gone wrong to a degree. And the piling into that, and it does dovetail into that episode that we did do on tax and the lack of a capital gains tax. We've had quite a few factors that have really, really barreled people to housing. As you say, the 87 share market crash, which freaked them out on the share market, but also the tax advantages and, yes, the reliability and the solidity of the market and the so-called guarantee gains and one-way bet has really meant people have piled in.
100%. So as what we saw after 87, as you say, those people, they needed security and safety, so they turned to housing. So we saw in some ways, an entire investment sort of ecosystem sort of evolve, because you had you still had a private system running your banks, so the capital became easier to get. You had negative gearing, so investors could deduct interest costs, in some cases rental losses. You had, which meant that people were able to do buy 3, 4, 5 houses. And in fact, there was a little bit later on in the 2000s, it was canned, but they had a thing called the LAQCs, which allowed people to put a whole bunch of companies into properties into sort of a company and then claim losses. Yeah. So you had all these sort of mechanisms and tax things that start to evolve. And of course, as we've talked about, no capital gains tax.
And no stamp duty.
No stamp duty. It was tailor-made. So why wouldn't people? And so then you start getting the situation, and we might have a little clip here of that ecosystem of flipping.
True success in flipping starts with number 1, acquisition price. You got to start right to end right. Number 2, do not overspend. You got to make sure the juice is worth the squeeze. Number 3, timeline. You got to get it right. You got to keep it tight. Time is money. Don't forget.
This is just a social media guy because there's millions of them out there who still promote themselves as property investors. And this is, some people listen to this and will be like, there's nothing wrong with that, because there was this idea of Kiwi dream sort of stuff where you find a beat up old property, you go in and renovate it and put time and effort.
Didn't we make a TV series called The Block?
We sure did. And we dream home, The Block. It's part of that cultural thing, and then you do it up, you make the capital gain on the end of it, and you move on to the next one. And that's effectively a whole ecosystem seems to evolve over the 90s and 2000s around that idea of flipping properties, that's how you make your retirement. That's how you get ahead in this country. And it's not as much as it used to be. It's still there to some extent, although a bust certainly.
Yeah, you might be flipping backwards a bit.
But that's a way of life for many New Zealanders, and can you fault a tradie in the regions who sees an opportunity to do up a property, make some money? You can't fault them on a rational human level.
No, and also capital goes where capital flows. Correct. And it'll take the path of least resistance, which is why you engineer your tax system to try to generate the kind of behaviour that you want and is going to be productive to the economy, and you try to dissuade the things that aren't going to be there. And that's been the critique from those who say that we need to have a capital gains tax.
The problem with that is, and you see, the thing is, I don't blame the individuals who do that and have made money doing that, because that's free market and that's the way it rolls. It's the policy settings and the environment and people being able to see the big picture. Because what that flipping has relied on, of course, is that house prices keep rising.
Yeah.
And are always going to keep rising and continue. And no one's going to get caught out. But people do get caught out.
Well, that's right. It's like musical chairs, isn't it? If the music's playing and everyone's got a seat, it's okay. But if the music stops, and you're in trouble, aren't you?
Yeah. So we had the GFC. Obviously, that put a dent in things around 2007. There'd been a very strong build-up in prices in New Zealand before that in the early 2000s, right up to from 2002 2007, 110%. Increase in prices. So
say that again. So because I thought that they doubled in from 2000 to 2010, but you're saying so that in the Clark years. They doubled, did they, in those five years?
Yes, that's what my stats show me. So the median moved from a high 200s to mid 400,000s at that point. Yeah. Floating mortgage. But this is the interesting thing at that period. If we go quickly here, but in that 2002 2007 period, is interest rates actually got quite high.
Yes.
They couldn't. So the Reserve Bank, which is a role to cool it off, couldn't cool it off with high interest rates.
No.
People are right into property.
Yeah, and because that's right. Even before the GFC, I think interest rates were up around 7%. I think you were paying 7 or 8%.
Yes, and just to tangent slightly, one of the biggest stories I've done in my life was when Michael Cullen suggested they put a levy on mortgages. This is at this point in the cycle because they trying all these different things. They couldn't cool off the housing market. It's booming. And they're like, and he mused out loud to me in an interview that maybe we should put a levy on people's mortgages.
I remember that story.
And let's just fair to say there was a swift reaction of like.
I think you were at News Talk ZB in the gallery in those days, were you? Was that? Or was that a TVNZ story? I can't remember, but I remember the story.
Yeah, no. Let's just say Helen Clark put the kibosh on that within about 4 hours or something. You know, she was like, that ain't happening. Let's have a little listen to this clip because the GFC hit and it did have an impact.
traders here working the phone say a lot of their customers are freaked out.
Apple's under pressure. Yahoo down 8.5%. Cisco 6.5%.
Every day they're pounding it.
What in the world is happening on Wall Street?
2-year no yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
Now, obviously, the GFC was I won't go into the American housing issues there. People who've seen The Big Short can do that with the subprime. We did see a slump in house prices in New Zealand as a result because there was an economic fallout from that, and house prices fell about 9%, it looked like to me, in nominal terms, real terms, 15% from 2007, but they'd recovered by 2012. So that's the period it took for them to get back. A reasonable amount of time, but they recovered reasonably well there. What I want to get to, some of the interesting stuff here. Okay, so we're in this environment where housing is king. It's the early 2000s. What do the politicians do about it? So what can they do about it? So we start seeing, we'll just make life easier for first home buyers. Any ideas on what they might have come up with back then?
For first home buyers, there was a scheme. I can't recall what it was.
Well, I'm not surprised because it doesn't do bugger all, I wouldn't have thought. You've got your welcome home, your first home loans,
yes.
You've got the KiwiSaver
Well, you've
withdrawals.
got your KiwiSaver
That's
withdrawals,
probably been
things,
pretty helpful because people can use their KiwiSaver. So I guess what point I'm making here is the initial response from politicians is, we've got this terrible housing affordability problem because the housing market's booming and the economy's coming back and we kind of need it to be coming back in 2012. So they're like, we'll help first home buyers get in, which of course is counterproductive because it's only going to foster more demand.
Well, that's right. And they've tried those policies elsewhere. I think in Australia, we actually give people, I'll give you $20,000 to help you with your deposit on the house. And what happens? Well, overnight, the housing market goes up by $20,000 because people know they've got more to pay.
So we've got the key government, if you think about it, and it's so we start to see the housing market come back into the focus again. The GFC slump's over. 2012, things are starting to roll again. Auckland house prices are nearing $1 million. It's 2016. Have a listen to this clip and see if you can, you'll be able to tell me all about it.
So you are saying that you want prices to drop
Yes.
roughly by what?
We would like to see them come down to something closer to 3 or 4 times the median household income. Now,
Wow. Okay, so let's look at these figures because it's important.
Yes,
it's $1 million at the moment for an Auckland property.
Yes.
Right. It's a 1 to 10 ratio. You're talking about a 40-50% drop in house prices
over a long period of time. Yep.
Yeah, I was probably giving Materia Tude a hard time, was I? Can't remember what show.
She broke the cardinal rule.
Yeah, of saying house prices should drop. And that was very, very controversial in those days. I remember...
It still is, probably.
Yeah, Helen White actually
recently
got into this issue, the Labour candidate for Mount Albert, or Labour MP, should I say, for Mount Albert got into this issue recently. But, even very orthodox economic-minded people like Don Brash, I think, not too long after that, or maybe a few years after that, said something fairly similar, if you remember, that house prices should drop considerably. And we have seen that. But, it's difficult, isn't it? Because, a bit like that musical chairs analogy, there's always someone, depending on where you are on the conveyor belt, who's going to get smashed by that, eh? Which, you'd agree with Materia today at that point that house prices dropping would be great for people who are trying to get into the market. It's just that it's catastrophically bad if you've just leveraged yourself to try to get into a home.
Just got onto the market.
It's difficult.
And they're suddenly like, I don't want my house prices to fall. But there was I distinctly remember that sense, that period where, as journalists, we were very focused on this issue of affordability because it had got completely ridiculous.
Well,
9 times, as you say.
Come on, I mean, it was 9 or 10 times, and we would see these I can't remember the names of the reports, but it'd come out in January, and you'd usually lead Morning Report on the first show back of the year with it. Some international agency did this report, and Auckland would be at number 2 or number 3 in the world for housing and affordability. And you'd look at a house in Auckland, it'd be an absolute shitbox, and it'd be 1.4 million, and then they'd show you what you could buy in the south of France for that or something.
Comparing to London
we just
prices
got
and stuff.
absolutely insane.
Yeah, so I've got here, and I was doing a lot of research with these numbers, I've got 2013, 2016, national nominal prices rose 49%, Auckland prices rose 52% over 3 years. Typical Auckland home literally went from you were sitting there in 2013 and it was 600, 650. 3 years later, it's 900, $1 million. You've just got $300,000 richer by sitting there doing nothing. So if you've been an investor and you've bought 5 houses or 6 houses, and it's all capital gains free.
Well, that's right.
There were some big winners.
There were, and a lot of people locked out, and also, a lot of revenue lost to a government if they had a capital gains tax, which, as we've talked about, we are one of 2 countries in the OECD who hasn't had it. I've got no love for a capital gains tax per se. I'm just saying it's orthodox economic policy.
Well, they would have made a huge amount of revenue.
Think of how much revenue they would have made. And now, as we laughed about the other day when we did the tax podcast, if Labor actually get it across the line, we don't have growth in capital, so you're not going to get hardly any money. So it's incredible that lost opportunity in a way.
Let's rip through some of the other things. Okay, so politicians are like, well, saying that house prices should fall was controversial at the time. Their focus was on, we'll help first home buyers. Help first home buyers. Don't do things that are going to bring the price down. But they did. The pressure built. So you've got the foreign buyer ban and that whole issue with Phil Twyford, which we've talked about on Context, the Chinese-sounding names, the pressure that Labor put on with that foreign buyers ban, which we have now to this day.
We do. There is. So that was eventually done under the New Zealand First Labor government, and there is a concession now where you're allowed foreigners to buy homes over $5 million, right? Which
Aussies are free as well, and
Singaporeans because we have a trade agreement with them. Yeah.
So then you had the government, as I say, they reduced some of the benefits around rentals and offsets and those sort of things. You had the Bright Line test, which we've talked about before, that gets brought in by national government too to try and do that. So there's a real feeling among policymakers that, this is actually getting scary. The Reserve Bank, of course, sitting there starting to worry that this is actually going to affect New Zealand's financial stability, not just that interest rates need to be higher or lower, that they're worried about the actual stability of the system.
Well, that's right. And did they introduce debt to income, or is it debt to value ratios? The Reserve Bank uses that tool, don't they? And
they do
did
indeed.
Introduce that.
Let's talk about that. So then the government's doing that's what it can do, and in the end, it was the Reserve Bank that kind of stepped up in a way. Graham Wheeler was the guy, and he brought in loan to value ratios.
Loan to value, that's right.
And effectively what they were a speed limit on the banks. So at that time, you could go and get a 100% loan quite easily.
Yes.
You didn't need a deposit.
No, and I won't flick back to the GFC in America, but the so-called ninja loans, no income, no job, were handed out. You didn't even need a job. You go to the bank and give you 100% of the loan, and that's all good as the things are going up.
Yes.
But when they don't and they plateau, the whole thing crashes
down. And that was
down.
what was really worrying the Reserve Bank. So what the loan to value ratios did is they said to the banks, you can give some 100% loans, but you can only give 20% of all your loans of your book. So that slowed them down. So they just couldn't give out as many.
Yeah, they called them speed bumps, didn't they, colloquially?
Yeah. Now, we've since also got debt to income ratios, which is puts a limit on how much you can borrow depending on your income. They got brought in. They haven't probably had to be as draconian about that in recent years because of the housing market coming off. But it might be a factor if we see we did see another boom in the future. You might see those debt to income ratios start to bump, and you might see pressure from politicians. Because I'm telling you right now, I was covering the LVRs a lot as a political editor at the time, and the politicians at the time did not like the Reserve Bank doing this.
No, and again, this is one of the great things about New Zealand still. We still have powerful and credible institutions and independence from the Reserve Bank. Can you imagine the Fed trying to do that against Trump? I mean, it probably wouldn't happen, would it? And as you say, that's the Reserve Bank's job, is at times to piss off the government. They were worried about financial stability, and so they wanted to introduce that, and the politicians didn't like it because it wasn't going to be popular with voters.
Right, so as we roll on through the 2010s and into nearly into the 2020s, the debate sort of shifts again. Okay, so the politicians are saying the Reserve Bank's acted. It's gone, we're going to slow this down if you guys aren't. The politicians really don't want to talk down house prices. They want to get elected. They like we should talk about this. They like the wealth effect of rising house prices. They like the fact that people feel richer, and it helps them get elected, I think.
I think that's absolutely right. And John Key understood that. He understood
very well.
He understood that very well. And look, I'm sure he was genuinely concerned about people being locked out of the market, and he probably thought it had gone too far. But he was also very well aware that the Aucklander who woke up $7,000 nominally richer than they were the night before, and that's probably not an exaggeration. I mean,
they might go buy a fridge and a couch and a car.
Exactly. And we've had to grapple with this question in Auckland, haven't we? Is how does the Auckland economy work without a housing market that's on the way up? Because Auckland is, our economy here has really struggled without that halo effect.
Hopefully, a little sidebar. Hopefully, it will be. This is the
some
medicine
good.
that will do us some good,
yeah.
because it is not healthy to have a housing market that has boomed in the way, in my personal view, has boomed in the way it has. Everyone would like to see house prices gradually go up, income match it, something similar, in an ideal world. And it's probably unrealistic, but the booms are so disruptive and so harmful and do hurt people trying to get in. What's interesting next is the politicians. Where do they go next, do you think? What's the next issue? What's the next area they go, okay, well, how else can we try and... how do we deal with this? If we're not going to bring in capital gains taxes, we're not going to stop people really investing in property, what's the way to solve the problem?
Well, I suppose it's the supply
100%. Have a listen to this.
And if the Greens wanted to support us on RMA reform to allow us to release that land even quicker, we could do that. And so what the member does is parade on TV like he cares about New Zealanders, but he cares so little, he's not prepared to change the law. He can keep smiling, but why doesn't he do something about it?
That's John Key. Any ideas on the Green MP?
Probably Russell Norman.
Close. I think it was James Shaw, but it was one of the Green leaders. But again, it was the beginnings really of a big supply side response, and you heard this all the time from the economists and the politicians.
But isn't
it's supply, it's supply, it's supply.
But isn't it interesting the tension even in the National Party, and you've seen this playing out between Christopher Luxon and Chris Bishop. Chris Bishop was very much the supply side guy, right? He wanted
100%
X number of 100,000 houses in Auckland. Can't remember the exact numbers. Was it 1.6 million or something at one point? And then David Seymour famously said, people in Epsom aren't going to want to see you look up from their swimming pool or whatever and see a big block towering over them or whatever. So you get some politicians in some electorates where they, there's a bit of NIMBYism going on, and they think, I don't want, intensification housing in my heritage area.
Yeah.
So there's a real tension there, isn't there, on the centre right?
Absolutely. So we've seen various massive changes with the Auckland Unitary Plan, and we need to acknowledge too the population growth that we've seen in New Zealand has been a contributing factor, undoubtedly. That this is another whole separate topic. The idea that arguably we weren't building enough houses to meet the demand, the amount of not just the growth in population, the immigration, all those things. They weren't building enough.
Yeah, and planning has to be a massive factor. I mean, the idea that house prices should be 9 or 10 times income in New Zealand, which is effectively an empty country. We're the size of Japan. We've got 5 million people. They've got 120 million. So how can that be? And so planning has to be a massive impact on that. If you're saying you can only build here and here, then of course you're going to shrink supply. And as anyone who knows anything about economics, the fewer products you've got available, the higher the price is. So that has to be surely a massive factor.
It absolutely is. And I would say early indications are that the supply side work that was done, actually, to be, I'm going to give some credit here, that Phil Twyford, Chris Bishop,
Nick Smith back in the day,
they have made a difference with that stuff.
Yeah.
And it has made a difference by opening up more land in Auckland and removing that land banking thing where people were land banking on the corners of bits of borders where they could see that they could hold on for ages and lift the price. All these sort of things these were the debates.
Yeah.
And I've even seen Paul Krugman in the New York Times, a Nobel Prize-winning economist a few years back. He's referred to Auckland being a success story because they're grappling with similar supply issues in America and other places. And he said, well, actually, Auckland has kind of shown that you can make some real gains there. So I
Did no one tell him about Christchurch?
Well, the thing with Christchurch was that I suppose after the quake, they were just there was a lot of land that could go west, and you Rolleston.
It's
and
amazing
north.
the growth out there, isn't it?
It is amazing. And that is, I suppose that's one point to make, that there are different parts of the country. I mean, right now, for example, Queenstown is probably not looking too bad house price-wise compared to others.
Christchurch.
And Christchurch,
But Wellington
exactly.
and Auckland, suffering.
All right, I think that's pretty much taken us to where we need to be. I still think housing is a fundamental thing. It'll be very interesting to see whether it crops up in the election. You're so used to it being a question in a debate about first home buyers and affordability, yet we're going into an election with house prices falling.
Yeah, that's right. And again, that'll put pressure on Labor over its capital gains tax, because it's promising a number of policy gifts, if you like, mainly in the health sector, based on the capital gains. And at some point, I would expect stronger scrutiny over how much money is going to come in from that capital gains tax, where we're not seeing a lot of capital gains. Obviously, Opportunity, which is now, as we record this today, scoring about 8% in the polls and looks like it's going to be in Parliament, and it wants to reduce the land tax. Again, context listeners, go back to our tax episode to get more on that. But those two things of the capital gains tax and the land tax policies will, I think, be key election policies.
I think when we think about whoever's formulating the election debates, so maybe we should do a context on election debates.
Yeah, that'd be fun.
When they do this, and you and I, I've done a few I did the minor party one once. You've done the big kahunas.
It's a very scary thing to do.
And you're formulating your questions and your sections.
That's right.
Housing would have been right up there in the years gone by, I reckon.
Yeah.
And what are you going to do to get someone into? Will it be this time?
Yeah, probably not. I mean,
tax will be 100%.
Tax definitely will be. And look, let's be honest and recognise that still for people, on average incomes, it's still very hard to get the deposit together to buy a house in New Zealand, even though the market's soggy and for people who actually are in the market, they're not feeling as wealthy as they used to be. But it's still not easy to buy your first home in New Zealand.
No, definitely not. And yep, we might be at about 6 times income now, but let's hope that we can see the dream scenario: rising wages, rising incomes, house prices flat. They meet in the middle somewhere.
Yeah, that's the new Pavlova quarter-acre, half-gallon paradise, isn't it?
We can only hope. All right, that's us for this week. Catch you.
Thanks, Corin.